Hello, traders. It's Ryan with Stock Investing and Trading 101. Today, we're doing our end of the week weekly trading app review. We're going to talk about our trading performance on Robinhood for the past week, how much profits we made, what our positions are going into next week, and just our overall game plan, trading, and navigating in the current market conditions. So first, let's look at our profit for the past week. We got about a 2.45% the last week, which is definitely acceptable. It's been a little bit less than what we've been averaging lately, but it's definitely acceptable. I'm typically aiming for maybe 1% per week, but we've been definitely outperforming. For the month, we have about a 3.73% return for the past month, which definitely isn't terrible. The past 3 months, we have about a 10% return. And for the year, we have a 75% return. It's pretty much been just a consistent shot upwards. And this is pretty much just coming from buying the dip very aggressively, watching the markets come up, taking a little bit of profits, buying the dip, riding it up, and rinse and repeat. So that's the basis of my strategy, but we also do sell a lot of premium, and that's where you'll see like the slow and steady increases of portfolio value is from selling puts or calls, selling premium. So going into next week, I have kind of hedged my portfolio with the markets and the SPY, which we will look at. We'll also compare the trading results. So we got a 2.45% return for the week. The S&P 500 increased about 2.42%. So we're pretty much right on par, slightly outperforming the market. On a 1 month basis, we are significantly outperforming the market. The market has a 2.15% for the month. We have about a 10% return. Comparing this to the technology stocks and the NASDAQ, the NASDAQ only increased about 2% this week, so we outperformed that on the weekly and on the monthly basis. So with these particular ETFs and indices at all-time highs, you can see the NASDAQ has just made fresh all-time highs. We pretty much have all of the technology companies right at their all-time highs or making new all-time highs. You have the S&P 500 at all-time highs. So I've positioned my portfolio. I've bought some puts and some put spreads. These are relatively low cost, and these are not a core position of my portfolio, meaning I'm not short the market. And I'm actually just hedging my long positions because you guys can see I have significant amount of money invested in the stock market currently, and if there's some kind of correction or market crash anytime in the next couple of weeks or couple of months, I want to make sure that I'm not going to lose 10% of my portfolio or 5% of my portfolio. And instead of selling out of my stocks and waiting for the correction, what I'm deciding to do is just hedge the portfolio. That way I can keep my positions, I can keep collecting those dividends, selling that premium, and I can sleep well at night knowing that if the market goes up, we're going to make money. If the market goes down, we're protecting ourselves. We have cash available. We have our puts. We have VIX calls. And so if the market goes down, we could make money. And at worst case, we'll pretty much be flat. And if the market doesn't move much, we're still going to be making money from our premium, from our dividends. So it's kind of a win-win situation, which is how I like to trade. So going into next week, we have our puts on the SPY. We have a covered call sold on rocket companies. We have a SoFi cash-secured put. SoFi had a really bad day on Friday. It was down like 8 or 10%. So I sold a cash-secured put and benefited from the increase in volatility and lower strike prices. We have a call on SQQQ. We actually have a significant amount of calls on the SQQQ. So this is a risky trade. This is a leveraged technology ETF. So it's very risky, and generally it's pretty difficult to trade the SQQQ. So these are kind of like lottery tickets. I'm really looking at them as not, something that I'm like guaranteed to make money on. It's very risky, and I recognize those risks. Next, let's go into my stock positions. So at the top, we have our stocks that we're selling premium on. So we have Rocket Companies, Campbell Soup, and Gold, Barrick Gold, which is came down significantly from like $24 per share, $25 per share, down to about 21. So there was a decent move there, about 10% or so. We also have the home builders and a lot of dividend paying companies. We have Lowe's, Home Depot, Verizon, Clorox, Caterpillar, Union Pacific, AT&T, United Health, Kimberly-Clark, which had a pretty good day on Friday, finally. We have a little bit of MLM, Norfolk Southern. This is a train company. They are transport. We have Bank of Hawaii, Tractor Supply, Procter & Gamble. So you see the kind of core of my portfolio is revolving around dividend growth stocks. These aren't really, growth companies necessarily. They're not technology companies. So the core positions I have, Johnson & Johnson, this is another good one. These are safe companies that are paying me a dividend and thus lowering my overall portfolio risk. Walmart, 3M, General Mills, Air Products and Chemicals. So we do have a lot of stocks currently. Usually I like to keep my portfolio a little bit thinner. I don't like to have a million companies in my portfolio. But right now we're investing, we're growing our portfolio, and I feel safe and comfortable doing it the way that I'm doing it. We also do have some small positions that we're building in the S&PY, the index itself. I'm looking to invest about $10,000 into the indexes just to have a stable investment, and that way I can take the rest of my money and pick stocks, and that's also going to slightly lower my risk and just lower the amount of time required managing my portfolio. And then lastly, we have our technology companies, and honestly, I think they're a little bit overvalued, but I'm buying these companies because I have all of those SQQQ and short technology positions, which you can see right here. Since I have all of these options and I'm technically short technology, in order to balance that out, I'm actually buying technology stocks, and this kind of protects me a little bit. Obviously, the options are leveraged, and they're going to move a lot more than a couple of shares of stock, but it's the beginning of my position. That way, if there is a pullback, I can just average in and really build these positions. And it's also a hedge against my short position because, like I said, if the technology goes down, our options are going to make money. But if it goes up, our options are going to lose money, and we still want to make money if the stock market is going higher, and that's why I'm buying these stocks. So, lastly, we have some just kind of bond proxies like Duke Energy, BTI, which is a tobacco company that pays like a 6% dividend. AbbVie, which actually does have some growth to it. So that's pretty much the core of the portfolio. On Friday, I bought some SoFi shares, and I also bought some UVXY and VXX. These are also very risky, but it might be able to pay off. So that's pretty much the portfolio. We've had some amazing returns, and for anybody who's been following the channel and following these weekly reviews every week, just as you can see from my results, that pretty much a lot of my assumptions and strategies for trading the markets each week, they end up working out. So going into next week, I'm looking for a pullback. It could be next week, it could be 2 weeks, it could be 2 months, but I'm looking for a pullback sometime in the next 60 days, I'll say, even if it's only a 5 to 10% pullback, just because we're at all-time highs and, you know, just given the technicals and the market situation, I think it would be very healthy for the market to have a pullback. So I'm looking for that to happen, and if that does happen, I will take my buying power and invest heavily across all of my portfolios and buy the dip, which has been working for quite a while now. So as always, guys, thanks for watching the video. Don't forget to smash that like button if you haven't already. Subscribe to the channel. Drop a comment. Let me know what you're buying, what you're selling, how you're trading this market, and stay tuned for more. Thanks for watching.